So traders, I want to focus on gold. And the reason why is because I believe there's going to be a really good another buying opportunity for me. If you, at the start of the year, if you've been following me for all this year, you would know that I capitalized on this really big move to the upside in March. And now after all this time of doing nothing, I think we're about to get another really good buying opportunity. For me anyway, that could see us have a really good move up to around 3,000. I want to share with you exactly what that pattern is. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, make sure you have access to that training. First link in the description there. If you actually learn the actual details to my trading system, how I trade the markets, how I scan the market, how I trade only 30 minutes per day, and so on and so forth. So go get access to that, guys. So let's actually talk about this gold pattern here. So one thing that I personally am always looking at is I'm always looking at the actual trend analysis of any particular market. And I do honestly believe by looking at this level here, if I bring up, let's bring up the weekly chart here for a minute. Can I go back? Can I go back in that time there? Okay, so I'm always referring this to what actually happened back in 08. We do know there's a recession coming, right? We know there's a recession coming. So if I'm looking at the way gold actually performed last time before the recession came, what ended up happening? What ended up happening with gold, right? I'm going to go back. This is the weekly chart here. But this here, right? Let's actually draw. Let me bring this over here for you guys. And I want to bring up a line. And as you know, this here was the 08 period, right? So it's actually a bit more into the 08 period. So that there, let's actually see. Apply symbol. Okay, so when was that? That was 20th of the 3rd. Okay, so it was around March of 2008. So I'm just looking at the way that this actually worked. And as you can see, look what ended up happening here. We end up doing what? We end up doing nothing for a while. And then we started the breakout. We started the breakout, and then we got this period where it went sideways. And then we had another move to the upside. So if I bring this to where we are there, as you can see, this is what ended up happening. Nothing for a while. Then we started the breakout. Then we went sideways. Look at this here. We actually went sideways. What was that there? 1, 2, 3, 4, 5, 6, 7, 8. So this is about 2 months. As you can see, that was 2 months worth of sideways. And then we had another really big leg to the upside. So is history repeating itself, right? Is history repeating itself? Because if I bring up let me just bring this over here for you. If I bring this over here to where we are now, look what's happening here, right? Something similar, right? We do know there's a recession coming. So is this where something similar, not exact, right? Where we had nothing for a while, then we had a breakout, and now we're just going sideways through here. Because remember what happened, right? We actually broke out. We had nothing for a while. We actually broke. I know that was 2008 through there. Before the 08 period, what did we get? Nothing for a while. We had our first move up, sideways. That was that 2 months sideways. Another move up. Nothing for a while. Up. We've actually gone sideways now for a couple of months. Are we about to see another really big move, right? So that's the big picture analysis, right? Whether that's true or not, 2008 repeating, 2008 repeating all over again. So by looking at this level here, right, because there's a lot of opportunities around these markets right now. And a lot of people right now focus on the stock market crash, which I believe is going to be an incredible buying opportunity, by the way, guys. If you just look at the way the markets work, right? And by the way, if you want a successful trading strategy on the indices, just wait for that once or twice a year when the market is down 10% and then buy it. 70% of the time you'll actually be right. So can you imagine that? And then, especially if you start to overlay options and you're right and you hold it for many months afterwards, if we have a really big move, you can start to capitalize on some really big profits there. Anyway, that's a really simple strategy you can apply to every single year when the market's down, 8 to 10%. So Nasdaq and so on and so forth. So bit of a clue about what I'm actually probably going to be doing this week myself. But anyway, that's the stock market. Now focus on gold. So this is the gold big picture here. All right. So the gold big picture is we're trading with but that's the 2008 there. Gold is actually stepping up. So we're in a very big, strong bull market here. But if I start to overlay this level here in this is the shorter time frame chart. So let me bring this chart up to here. If we start to overlay this chart here, what is actually going on right now? we're actually starting to form a new trend after doing nothing for a few months. Now, what do I mean by that? I mean by this. Look at this here. We had this high up here. We had a high. Look at this here. We actually had really, on a short-term level basis, which is the daily charts, we really had no trend, did we? Right? Really no trend through here. And that means the market's gone sideways. And this is the point in time when the market is doing this. I don't personally like to trade because there's no probability, right? I want to be able to get into a trade when we're starting a trend. What does that mean? Well, a lot of the times we would actually go sideways. We would pop out, make a higher high, come down, make a higher low, and then that'll be the start of a really big up move, right? Or should I say, maybe not a really big up move, but at least the next leg in that move, right? Because all I'm looking for is a good probability of jumping on that next move. And then I'm looking to load up with good risk management, and hopefully I can increase my account by quite a lot. So as you can see, look what happened here. Higher high, and we actually made a higher low compared to this low. See, the buys are coming in here now, right? Notice how the buys came here higher low, but it made a higher high, then it came down to the same low. So the buys didn't come in much stronger here. Then we ran up to make a higher high. Notice what we're doing through here, right? That's probably a good 50% retracement as well too, right? From the low to high. There you go, 50 to 60%. But notice the buys came in here, where last time the buys came in here. And what does that actually mean, right? Because the charts are always talking to us, aren't they? So what that simply means is that the buys are starting to take control. So I'm really sort of chopping at the bits here because I believe that once we start to break above this level here, I believe the second leg is going to be much stronger than the first leg. Now, let me bring up the weekly chart again, and let's actually go back to that 08, before the 08 period, right? So let's have a look at this here. So the first move which was, this was the sideways period, okay? So we had this sideways period, and then the bam, the breakout, right? And then we had the bam, the breakout, which we did just recently, and then we had what? Then we had the sideways period, didn't we, for a few months? So this is actually playing out exactly the way that it did back in 08. So if we look at the percentage moves, right, from the low to the high point, we did what? That was about 2 months or so. It was around about a 30% move to the upside. Then we measure from the absolute major low point to the major high point from there. And we actually can see that that was another 30% to the upside. So it was like a 1-to-1, right? So we had this move to the upside and move to there. And then if I project this out from the ultimate low point to there, actually it was a lot bigger, wasn't it? It was actually a bit bigger. So that there was a 1-to-1. You know what? A 1-to-1 simply means if we measure from the high, then we measure from the low period. Okay. So as you can see, it was roughly 1-to-1, right? Which simply means that this first move is probably going to happen again. Now, why is that important to us right now? Well, if history is repeating itself, and that's going to happen again, and by the way, history is repeating itself, but also we do have we do have technical analysis on our side, right? Trading with the trend, trading after a pullback. So gold could be one of those greatest opportunities, guys, that we're waiting for a really big move, right? There's the other markets out there while they're doing the shake and bake, especially with me right now. I'm in a few trades that are making sure that I stay emotionally calm while they sort themselves out. Let's go play with gold for a while, right? So we can see that through there. So what does that actually mean to us? Right, if it's a 1-to-1, what does that actually mean, right? So this was if this is a 1-to-1, where is gold likely to go to, right? There to there, and then we bring up our there to there, right? So where is gold likely to go to? Gold, you can see here, is likely to go to around about that, at least that 255 level, if it's going to be a 1-to-1 level. Now, if that's not the level there, right, the 1-to-1 is there, right? But if it's more like from this point down here, this point down here, then we can see 270. I've always had a 3,000 target on gold. I don't know why. I've always had a 3,000 target on gold. My first sort of, and actually this is the GLD, right? So basically if we go to the gold chart, this is the same thing here, right? If I go back to the daily charts and put this up, look what's happening with the gold market. So gold is really, really shaping up quite nicely, guys. Sideways, higher, 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 low. We're going sideways through a bit here. And this is what gold tends to do before we start to get a really big breakout. I call it drifting pattern, okay? What I personally like to do myself is I always like to get in after the market's gone sideways for a bit. I like to get in here, right? Because it's like if you move up, move down, and then we get going for the next move again, right? But one thing I've always noticed with gold is that gold sometimes will, what's called drifting, right? It'll slowly go up first, up, and then get the breakout and then have a big move. If you go back and look at my actual trade here, look at this here. Notice before that was the breakout bar there. This is the day I entered because my system said so. But look what was happening through here, right? We had all this up move, didn't we? See that move? So gold tends to have these small bars going sideways for a little bit first, and then we get the breakaway, and then it really starts to starts to make some moves. So there we go, traders. That's what I'm looking at through there, and I know this is probably good news for you gold traders. And one of the things for you gold traders out there is that you got to be patient with these markets, okay? Stop trying to jump around these markets all the time and, oh my goodness, gold didn't go up today. It went down 2.01%. Oh my goodness, I'm freaking out, all right? Please try to stay calm with these markets, all right? These markets are here to make you emotional. And you need to do whatever you can to stay emotionally calm, because the market is going to go in. And remember, in a very big, strong bull market as well too, even in a very big, strong leg, right? Look at this here. We had a very big, strong leg to the upside, right? But look at this here. He was a big down day. He was another big down day. There was another big down day. All right. There's a big down day there. You know what I'm saying through there? So try to have an emotional calm, an emotional balance, not be so emotionally reactive to these markets, because we want to make good decisions, right? And we never make good decisions by doing that. And the only reason why you're probably doing that right now is because you have too much money in the markets at one time. You're trying to make too much money at any given one time. And that's not the way to truly grow your account, right? So for me personally, what I like to do is I like to trade a minimum of say 5%, especially using options. Sometimes I do 10%, right? So look at this here. This is how I personally like to trade. Say I had I use a much smaller number here that I have, but just say I had a small account like 100K, right? You know, or even if I was starting with only $20,000, the same number, right? But the thing is that I will probably no more than say 10%. So for example, on this gold trade, let's just say there was a gold entry here for me and I got into it. I'm going to put 10K on, right? 10K. I know that for me, out of that 10K, I know that if gold is a loss for me, then I'm probably risking 2 to 3K. 2 to 3K. Now, if it's a really big loss, like gold really goes against me, I'm probably going to be down 5K, right? So that's probably the worst case scenario if something really, really, really big happens with my trade, right? That's probably the worst case scenario, is around 5K, especially when I'm utilizing options and I'm utilizing the correct options for me. Makes sense? So or put it this way, my apps, if everything goes belly up, I've only lost what? 10% of my account. If everything goes belly up, which again, if you're utilizing options and you buy enough time with those options, then, you know, if you're buying like at least a couple of months, 2-3 months out, where you're not worried about the short-term movement, you know, again, a 50% loss on that type of option is a big loss, okay? And you shouldn't be getting that, especially anyway. So the purpose of me saying that is that, do you know that I actually got in here and got out here for almost a 400% return? So if I'm out of this $10,000 here, right, I really want to try to share with you, how do you really grow your account by trying to keep your losses small? Because at the end of the day, we never know what's going to make a big move, right? Like I'm in a few trades right now, which are in a losing position, right? I'm not out of a position because I'm not out yet because I'm holding on to these, and due to my technical analysis and my trade management. And I know that probably there's a big probability as time goes on, these things are going to turn into a really nice profitable trade, right? But I'm using my exit tools and so on and so forth. So for you, right, if you think about this as what your account is, if I do a $10,000 trading account, I know I'm risking roughly, you're saying $5,000, which is what? 5% of my account. Make sense? That's 5% of my account. I've got 10% of my account. But if up here, I made close to 400% return, which is what? This here now, this here was the risk. The profit was what? 40K. Right? The profit was 40K, which is what? A 40% increase on my account. And this actually happened at around about this actually happened as this market went through here. I capitalized on that through the 6 weeks. I was just thinking about that. The reason why I was stumbling there is because I'm trying to share with you that while this is a black and white thing, right? This is what I'm always trying to do. But how does this actually become in reality, right? It's firstly identifying a good trading opportunity. Then secondly, knowing how to stay into trades so you're not getting out too early. So when this market is going sideways, how do I know to stay in and not get out? Right? All these different things that goes into it. But I'm trying to share with you that the reason why I'm bringing this up here is because if you've got too much money, from a trading perspective, if you have too much of your account in any given market, you're trying to load up. If you had a 100 grand account, you got 50 grand in options right now, and it needs to move in 30 days. Otherwise, that's just too much risk, right? And because you've got too much risk, you're not emotionally thinking. And therefore, you're probably going to lose money, right? Because if you had 50% of your account on gold right now, and just say you put on a position through here, which again, if you do that, you're gambling. Because for me, it's all about getting that trigger, right? It's all about the trigger to say, now we're likely to go. But if you're doing that, you may be right with your call, but wrong with your management, right? So a $50,000 position, because you got too much money in here, the market will go down or go up, and as it's going down through here, you may be losing some money now. Just say you're in options, and now you're freaking out. Oh my goodness! Oh, the stock market's crashing. That means gold's gonna crash. Oh my goodness, what's going on? And you start to really, really, really freak out. And then guess what ends up happening? You end up getting out here, say a 10% loss. Right? You go, oh, I can't handle this anymore. Yeah, and I'm scared. Gold's going to go down. The stock market's going to go down. Everything's going to crash. Oh my God. And you go down this really big, massive rabbit hole, right? Of fear. Letting your emotions play out, right? And then what ends up happening, right? So 10%. So now you've actually lost 5 grand on your account, right? Because you traded a $50,000 position. Right, 10% of that is $5,000. So now your account is down 5 grand. Where if you trade a lot less, 10 grand, and you actually had a really good system to tell you the exact day you should be getting in on, right? And you had a big move. The person who traded 50K is down 5K. The person who traded 10K is up 40K. Do you see how it's something that for my last 20 years of actually trading these markets, traders, it's taken me a long time to really figure this out, that I don't need, by me actually trading a good percentage of my account, it allows me to stay emotionally calm, and I'm probably likely to make more money by trading a much smaller position than try to load up big time, trying to go for the Hail Mary, right? Because at the end of the day, we never know what's going to happen, right? Like I could get into gold and there could be a losing position, right? But we always want to give ourselves the probability from there. So if you like this sort of stuff, guys, and you'd want to get my help, then you might be good for my coaching program. The coaching program is where you actually join me every single day, where you can see the trades I'm doing. And then when the market closes, I also spend a lot of time personally coaching you and helping you and answering any questions that you have, and a small group of traders. So if you like this sort of stuff, guys, and you like what I'm doing, and you like to get more like every single day, really just being there for at least half an hour to an hour to show you what I'm doing, to coach you through these markets, then you may be a good fit for what I'm looking for. That first thing in the description there, guys, or if you go to getjohnshelp.com, there should be an application form there. Go fill it out, guys, and I'll speak to you guys real soon.